I mean, this is one of the things you and I have talked about a lot, Wilfred, is people don't understand the impact of interest rates on banks. It's not just that when interest rates go up that's good for banks because it's the shape of the yield curve. It's not just the shape of the yield curve. Some banks are more deposit sensitive, liability sensitive, which means that it's harder for them to attract deposits without paying higher rates. Citi is a big example of this. Their deposit base is very sensitive to higher rates, and so they don't get the benefit when interest rates go up. So different banks respond differently, and just fundamentally, banks weren't that cheap. The average regional bank was like 1.7 times book, just not that cheap.
Margie, in terms of whether or not now is a buying opportunity for the banks, are you willing to dip your toe in? And if so, which particular stocks?
I don't think the banks are particularly attractive. The main reason being, besides the very flat yield curve, doesn't give them a big net interest margin. There really isn't any sector of the economy that has very, very strong loan demand. A lot of their business is commoditized, so I don't see where the growth can come from, even with a strong economy. So I really don't think the sector is very attractive.
Charlie, what about the Goldman Sachs and Morgan Stanley of this world? I mean, clearly they're meant to benefit from the volatility picking up, and they have underperformed the broader KBW Banks Index year to date.
That's a great point. I'm glad you asked that. Goldman Sachs is now trading for less than book, 0.95 books. They had a spectacular quarter. They are not loved. Their equity business is coming back strong. Their investment banking business is strong. There are going to be a lot of tech IPOs. Goldman Sachs is very well positioned, trading at about 9 times earnings. Morgan Stanley very well positioned. Lazard actually is our favorite. Lazard's got a great M&A franchise, trading at about 9 times earnings, has a great asset management business. We love those businesses.
Margie, how should we think about loan demand, especially as going to the end of this year? I mean, we've started to have some debates here on this network that you could potentially start to see the U.S. economy, the growth here begin to slow, as we've seen growth slowing in other parts of the world. Are there any sort of signs that that could be potentially taking place when you look at activity within banks?
Well, I think you really have never seen strong loan growth the way you'd expect in a normal economic cycle. And so I would expect loan growth to slow down. Many companies have very high free cash flow. They aren't even investing, so they really don't need to borrow here. Consumers have been very muted in borrowing. So there really isn't any sector of the economy you can point to, except for the government, that is going to have a very, very strong growth.